Hi and welcome to our analysis of Indraprastha Gas Limited, a leading player in the Indian city gas distribution industry. As a pioneer in CGD, IGL significantly contributes to India's energy landscape by promoting natural gas, a clean and sustainable alternative. Their mission is to provide safe and reliable gas supplies to various consumer groups from powering vehicles to fueling homes and businesses. In this video, we will delve into Indraprastha Gas's business segments, revenue segments, shareholding, management, cost structure, financials and management outlook for the future. Let's get started on the stock analysis of Indraprastha Gas Limited. But before that, let me introduce ourselves. We are PA Wealth, an investment services group. We offer stocks PMS, mutual funds, alternative investment funds, insurance, and startup investments. Every week, we upload research videos on different companies, mutual funds, and financial topics. Stay ahead of the curve with the latest trends and insights by subscribing to our channel and clicking the bell icon to get notified about potential multi-bagger stocks. Let us provide a brief introduction to Indraprastha Gas. Founded in 1998, IGL is a joint venture between GAIL, India, Limited and Bharat Petroleum Corporation Limited, BPCL. Their mission is to provide safe and reliable natural gas supplies to various consumer segments such as transport, domestic, commercial and industrial. IGL boasts an extensive distribution network spanning across National Capital Territory of Delhi, NCT, Noida, Greater Noida, Ghaziabad, Hapur, Gurugram, Meerut, Shamli, Muzaffarnagar, Karnal, Rewari, Kanpur, Hamirpur, Fatehpur, Kaithal, Ajmer, Pali, Rajasmand, Banda, Chitrakoot and Mahoba districts. Now, let's look at the business segments of Indraprastha Gas. IGL operates in two primary business segments. First, compressed natural gas, CNG. It caters to the transportation sector, and CNG offers a clean and efficient alternative to traditional fuels. Piped natural gas, PNG. PNG provides a convenient and reliable gas supply for domestic, commercial, and industrial applications. Now, let's discuss the sales mix of Indraprastha Gas. CNG is the largest segment of the company's revenue, accounting for 75% of the company's total sales volume for 9 months of the financial year 2024. This is followed by PNG, which includes industrial and commercial sales accounting for 12% of the total sales volume, sales to other CGD companies accounting for 6% and residential sales accounting for 7%. Now, let's take a look at the management of Indraprastha Gas. Shri Kamal Kishore Chatiwal is the Managing Director of Indraprastha Gas. He holds a B.Tech in Chemical Engineering from IIT Delhi and boasts over 32 years of experience in the oil and gas sector. His expertise lies particularly in project execution and commissioning of mega petrochemical projects, operation and maintenance of gas processing units, natural gas compressor stations, and cross-country LPG pipelines. Shri R.K. Jain is the Chairman of Indraprastha Gas. He is a seasoned professional with nearly 30 years of experience in the field of finance. He currently serves as the Director, Finance, of GAIL India. A cost and management accountant by profession, Jain brings a wealth of expertise in various financial domains, including corporate finance, treasury management, and regulatory affairs. Throughout his career at GAIL, he has held various leadership positions and has been instrumental in managing critical aspects like forex risk management, capital budgeting, and finalizing long-term international LNG and gas agreements. Let's take a look at the shareholding of Indraprastha Gas. The promoters are the largest shareholders of Indraprastha Gas with a holding of 45%. Mutual funds hold 9.04% of the shares. Foreign institutional investors hold 17.9% of the shares. The public holds 14.36% of the shares. Other institutions include several investors, such as banks and insurance companies. They hold 13.7% of the shares. Let's take a look at the cost structure of Indraprastha Gas. Raw material expenses are the largest component of Indraprastha Gas's cost structure, accounting for 73.81% of the total costs. Power and fuel costs account for 3.49%. Other manufacturing expenses account for 4.11%. Employee cost accounts for 1.33%. Selling and admin expenses account for 2.34%. Other expenses account for 0.41% of the total costs. Now, let's focus on the financials of Indraprastha Gas. The table shows that the company's net sales have grown steadily from 3,913.79 crores in the financial year 2014 to 14,145.85 crores in the financial year 2023 at a CAGR of 13.71%. The company's profit after tax has also grown steadily from 360.26 crores in the financial year 2014 to 1445.02 crores in the financial year 2023 at a CAGR of 14.9%. At last, the company's return on equity has slightly decreased from 20.43% in the financial year 2014 to 20.39% in the financial year 2023. Let's now turn to the management commentaries to get a better understanding of the company's performance. The company's turnover has grown by 84.09% year-on-year to 15,542.67 crores in the financial year 2023 from 8,442 crores in the financial year 2022. Natural gas accounts for 6.7% of India's energy mix in FY23. The Indian government plans to raise the share of natural gas in the energy mix to 15% by 2030, which will be driven by transport, residential and energy sectors. The company's PNG steel pipeline network increased from 1868 kilometers in FY23 to 1965 kilometers in 9 months of FY24. The company expects future growth to be driven by industrial and commercial segments, targeting to add around 2 lakh PNG connections every year as well as increasing dispensing capacity to ease queuing on its stations. The company has planned a capex of 1400 to 1500 crores, of which 20% is allotted for LNG stations and CBG plants. The company entered into a joint venture agreement with Genesis Gas Solutions Private Limited, which has a stake of 49%, while IGL has a majority stake of 51% in the newly formed to set up integrated smart meter manufacturing plant to produce 1 million meter annually with a capex of 110 crores. The company intends to de-risk its operations by establishing charging stations and battery swapping facilities for two-wheelers, as well as exploring opportunities in renewable energy projects such as solar power generation, long-haul transport vehicle conversion, green hydrogen plants, compressed biogas plants, allied equipment manufacturing, and ethanol production facilities through acquisitions. The company is targeting to increase its sales volume from 8.33 mmscmd in Q3 FY24 to over 10 mmscmd by Q4 FY25. In the third quarter of fiscal year 2024, Q3 FY24, the company's gas sources consisted primarily of APM and non-APM, accounting for 78% of the total. HPHT contributed 4%, followed by R-LNG at 17%. The remaining gas was sourced through spot purchases on the Indian Gas Exchange. That's all for today. I hope you found this video helpful. If so, please give it a like and subscribe to our channel for more research-based financial content and click the bell icon for potential multi-bagger stocks. In the comments below, let us know what topics you'd like us to cover in future videos. Thanks for watching.